spinning blue ball. What's going on? It's another week in the markets, and I have for you 3 companies that I'll bet you didn't know paid a dividend. So the first 2 are kind of cool. The last one I swapped out last minute. I pulled an audible. I threw it in there because, well, I'll tell you, I'll just give you all of them. Anyway, so without further ado, I'm Russ. This is my little old channel, Dapper Dividends. Thanks for stopping by. We're going to go about an hour, full steam ahead, and I'm going to get you these stocks, and then we'll get in a little bit of live chat right after I turn my telephone down. Telephone. Anyway, so away we go. The first stock up, as I not so swiftly and deftly share my screen here. The first stock you didn't know paid a dividend is eBay. Check it out. eBay, right? Crazy. They've actually only been paying that dividend for a few years. So they say that the penny is dying, and I wanted to get a penny from every year of the United States. So I think it's 13, maybe 14, and I'm getting close, but the older I'm going back into the early 1800s is, I'm not trying to buy something really nice, but anyway, I'm doing it on eBay. I think eBay is a great place. Everybody knows about it. I don't know if Amazon will ever compete with them on that level, but man, they are just great. It's like a worldwide garage sale, I always say, is eBay is, and we love them to buy. I don't know, junk isn't the right word, but we love buying what's on eBay. So check out eBay here, and they have, excusez-moi, 2.4% dividend yield, 2.04%. They grew that dividend 22% in February of 22, but they get a safe dividend safety score. That's pretty cool. Obviously, everybody's familiar with eBay, and there it is. In 2018, they started paying that dividend. Oh, do you know what I wanted to show you before we really dig into this? I must have closed it. I guess you're going to look into my files with me. So we got this. So I had this whole thing planned out, and I decided to just do this for the live stream, but check out this chart. This is from Professor Aswath Themoridan, and it's really cool because he shows that when companies initiate a dividend, they're pretty much admitting that their growth is done. They're really at the tippy tip top of their growth. And look at this chart he has, which is super cool. He did a lot of research. I actually contacted him. He emailed me back, said, go ahead, feel free to use this. But when a company initiates a dividend right here, this axis on the left here is the annual earnings growth rate. So they were at about 40% when they initiated the dividend in year 1. And then look at how they dropped down to almost 30% in year 2. The earnings growth rate is just over 25% in year 3. And we're just at 20% in year 4. So remember that when a company initiates a dividend, a lot of growth investors probably aren't going to like that because the company is literally admitting that they are no longer growing and they've got nothing better to do with the money. But paying a dividend is always a great option because it's going to prevent them from sometimes doing stupid things. Yeah, AT&T acquiring Warner Media wasn't that great, but anyway, so back to eBay. Now you know, and thanks again. Shout out to Professor Aswath Themoridan. I hope I said his name right. It gets confusing to me with my Americanized tongue. I'm American. So anyway, check it out. They've been initiated that dividend in 2018, 2019, and it's been growing for 2 years. 22 cents a share currently. In September of 2019, it was at 14 cents. The current dividend yield for eBay is 2.04% above the 5-year average. Their PE is below. So basically, this is a company on sale. 52-week price range buried at the lower end, $41. And we'll just run through a couple of the quick financials. Their free cash flow payout ratio, only 27%, guys. That gives them a ton of room to keep growing that dividend. The free cash flow per share, it's been a little bit choppy. Remember, I think they're competing with Amazon primarily, like Amazon Marketplace, but we love our auctions here and we love that. It's like I think it's kind of that little bit of gamification. You get that sense of like, I'm in it, man. I start bidding things up. It's fun. It's fun. It's fun until you spend 25% more than you wanted to on a penny. But sales growth has been dropping since 2020. Obviously, everybody was stuck at home, but this is really cool. They've been buying back shares like mad, people over there. Bought back 51% of their outstanding shares since 2012 when they had just a gob. It's just gobsmacked when I saw how much they've bought back, down to 637 million shares outstanding. Sales have been pretty much flat, which isn't too bad. Good return on invested capital. Return on equity could be a little bit better. Not a ton of debt, only 32%, and a decent amount of interest coverage ratio at 10.64%. Now, the second one is the hot dog, and that is going to be, you want to guess? It's Nathan's Famous. Nathan's Famous pays a dividend, and they are not rated by Seeking Alpha. They're not rated by Simply Safe Dividends because they're a micro cap company, only 224 million. And let's see in the notes here. I think they had how many? 239 franchised units in 18 states and 12 foreign countries. And there was a number of about how many different outlets, retail outlets and stores they have their products in, which is quite a bit. They ship their products online. But again, like eBay, they've been paying the dividend for only a few years. 7% growth was their last dividend. And currently at 45 cents a share. Since they had started it, it was pretty much frozen at 35 cents. And their financials are going to be a little bit spotty here because they don't really have any coverage on them. So I don't exactly know. I should contact Brian Bollinger. I've emailed him before. The gentleman who set up Simply Safe Dividends, and it's his baby. But I should ask him where he scrapes where he scrapes his numbers from, because we see a free cash flow payout ratio of only 39%, which is low. They can definitely grow it. But a lot of these you can see there's incomplete data. It's missing. So they've bought back shares. They've bought back 10% of their shares in 10 years, which isn't bad. Sales have been increasing nicely. I mean, check that out. From 2013, they had $71 million in total sales. They're up to 115 million, which is a good amount, right? That's a good amount. What is that? I wrote it, 61% sales increase in 10 years. And return on invested capital sky high at 49%. Return on equity negative. That could be better. But yeah, net debt, they do have debt. I checked on Seeking Alpha. So this is always something, do your due diligence. And if you want the true real numbers, always go to a company's investor relations page and get it from the horse's mouth. And then the last one. So why don't we do this? Uno momento, por favor. Agua. This guy's nuts. Yeah, we're all a little crazy around here. We have fun. It's just investing. It's just dividends. Come on. And what do we have here? This is the one I was going to do, but I pulled an audible at the last second. But I'm giving it to you. It's Darden Restaurants. It was going to be Olive Garden. And what caught my attention was that they grew their dividend in June last month. It's July, 10%. Darden Restaurants owns, here, if you ever wanted to own Olive Garden, Longhorn Steakhouse, Cheddar Scratch Kitchen, the Yard House, the Capitol Grill, and 44 Under the Seasons. Oh, see, I'm not a foodie. Seasons 52 brand. They have 44 of those. And then Bahama Breeze and Eddie V's Seafood. So they own quite a bit. I believe General Mills used to own Olive Garden and a bunch of these. And they I don't know, in the 80s, I think they divested themselves of it. But anyway, so it was going to be Olive Garden. If you want to invest in Olive Garden and receive a dividend, you have to go to the DRI, Darden Restaurants. They have a 25% 20-year CAGR. They started cutting that dividend right before COVID, I believe. No, that was COVID. So they cut from COVID. And we won't go too much into them, but $20.21 a share. They just paid that. But the one I messed up is the one I wanted to show you guys was it that long ago? The 51 years of stock splits, Tootsie Roll. Tootsie Roll has a dividend safety score of 99. And what's really cool about them is if you saw this already, just bear with it, because you know what I'm talking about. I went through all this information and I was stuck on one tab and it looked like garbage. But now I can talk to you about Tootsie Roll and you can see what I was looking at. So they do a stock split every year. It's a 1.03 for 1. So if you have 100 shares of Tootsie Roll every year, you're going to get 103 shares. So you're getting 3 shares. So I believe the number was, if you were to sell those 3 shares you got, plus the 1.01% dividend, I think it was like a 3.5% dividend yield, somewhere around there. And they're a mid-cap company, 2.39 billion. They don't grow it a lot, but they do split every year. It's a weird quirk that they have. So you can see just up and to the right, 56 years of dividend growth. So Tootsie Roll is a dividend king. Another cool thing is, going back to their start in the early part of the last century, maybe the last part. Anyway, the owner, or I forget his name, he wanted some of the previous day's batch to go into the next day's batch. And they've continued that ever since the first Tootsie Rolls. So theoretically, every Tootsie Roll you see on the store shelf contains a little bit of the original first batch of Tootsie Rolls. So really cool. That's on their website. Currently paying 0.9 cents, 9 cents per share per year. And again, not a ton of coverage here, but their dividend yield is about 3% below the 5-year average. So not really on sale, but just an interesting company, 46% free cash flow payout ratio. So they're going to be able to keep increasing that for many, many years. 77 cents of free cash flow per share. Not world beating, but they're Tootsie Roll. They're also one of the companies that like Warren Buffett likes to invest in, because I don't know how much technology changes, but I don't really see the Tootsie Roll changing all that much. You know what I mean? They bought back shares. They're still buying them back. We're at 78.9 down to 69.2. Total sales have been slightly coming down, but about flat. But anyway, Tootsie Roll, I don't think I would invest in them, but interesting company. And I would love to know if any of you invest in Tootsie Roll. So that was the 3 companies that we were sharing. I'll put the chat up here. And yeah, there it is, baby. We're here. I like, let's see. Yeah, Steve got it. So that was it. Sorry, guys. Little morning frog in the throat. Oh, by the way, I'm going to have a video coming out maybe an hour after we're done with this. I'm going to keep this right around an hour. We spent the day yesterday. We went on a bike ride around Lake Michigan in Chicago, the Lakefront Trail, and just spent the day in the city, came home and had a fire. So I kind of took the day off from creating content. So this morning I recorded it. Wonderful English, man. Yeah, man. I recorded, and then I'm doing this, and then I'm going to finish the editing. So it is 15, and I'm going to make this a recurring series, and I'd love to know your guys' opinion when it's done, but I'm going to do 15 dividend stocks that are going ex-dividend, and I call them my gems because I looked for stocks that had been growing their dividend for at least 5 years. They have a PE ratio that's below the 5-year average currently, dividend yield that's above the 5-year average, a starting yield over 1.5%, and a Simply Safe dividend score of borderline safe or better. So that was the filter I ran it through for all the stocks that remain, that their ex-dividend is in July. And I got 15 of them. So I share those really quickly. And I would love to know what you guys think when it comes out. I could do this easily once a month, kind of, help what stocks are looking attractive that are going to go ex-dividend in the next, 2, 3, 4 weeks, whatever it is within that month. I'll get the video out sooner next month. And always remember, with ex-dividend, you have to hold before the ex-dividend date. If the ex-dividend date is July 24th, you have to own it before market open of the 24th. So that would basically mean make sure you own it by market close on the 23rd. Yeah, buddy. So we'll flip this guy back. And what do you guys want to talk about? What have you bought? What have you done? I didn't really buy much. I actually made a few options trades, a Neo option that expired in 2 days from when I sold it. And then I believe it was Friday morning, I sold a Starbucks covered call for $80 when it was right around 79 per share. That was getting a little ballsy, but it was 14 or 13 bucks I made. So anyway, if you're watching, if you're new, just popping on, you can go back. I swapped out Darden Restaurants with Tootsie Roll. So that was the audible. And here we go, man. Yeah, Stephen Bishop, what's up, shipmate? So Stephen was in the Navy as well. And yeah, I love it, man. And then here we go. Greg, was it the Army, Greg? Let me know if you're right, or if you're right. Well, of course you're right. If I'm right, I believe Greg was also in the military. I think he's retired. We chatted a little bit on Instagram, and you're welcome, man. It's just sharing thoughts, man. Trying to get people, I don't know, share my learning. We're learning. We're investing. This is a long-term thing, man, and it helps keep me motivated to see what everyone else is doing. I mean, it's just, I love it, What do you got? Steve C. We got a lot of Steves. They call me Steve. From Minecraft, right? Roblox. Minecraft. He needs to even out his payments, so he needs stocks that pay in October. Favorite October payers? Yeah, let Steve know who pays in October. You guys want to look at mine that pay in October? Well, I think I can do that. Come along with me as I stumble and bumble. Let me try this. Here, let me do the Chrome tab here since I'll just be on. Hey, look, we can go right on it. So this is the mistake I made last time. I shared the Chrome tab and then I went to another tab and it didn't change it. So, hey, lesson learned. We won't repeat that, but here we go. If I go to portfolios, so it was October. Y'all wanted to see October. We go to the income calendar, see the year ahead, who I got paying in October. Make this full screen. Where's October? There's October. All right, so in October, I have Kimberly Clark, Altria. That's a big month. Kimberly Clark, Altria, Cisco, IIPR, which is Innovative Industrial Properties. That's the cannabis REIT. Leggett and Platt. Advanced Auto Parts is going to pay in October. JP Morgan, Merck, Genuine Parts Company, GPC. GPD, if you ever watched Gotham, that's all I always think of. Store Capital, Vici Properties, which is, I own Vici now because they merged with MGM Growth Properties. So those two are one now. And Stag pays monthly, so they pay in October. Realty Income also, you guys know if you've been following, I don't hold Realty Income because of the covered call I sold, but I'm making up for the dividends with covered call options income, and I'll eventually get back to Realty Income. And of course, the Divo ETF. So there you go. There's a slew of stocks that I own that pay in the month of October. Yeah. Ba-da-ba-ba-da-ba. Hey, I love it, man. What else you guys got to say? What are you lunatics saying? I hope that helped, Steve C. Bought Dow and GLW. Very interesting. GLW. I don't remember GLW. I won't switch over here. What we got? It's the weirdest thing that I'm talking to you guys and I can't see or hear you. It literally feels, oh, Corning. Hey, that's interesting because one of the stocks I talk about is Owens Corning. So I don't know if they are. Yeah, I don't know if that split. I think that did split, didn't it? I don't know. Hey, look at this. Stephen Bishop finally bought Verizon and ready to start buying Intel. Yeah, I think the semiconductor stocks are really they've gotten hit hard because of the drop. Well, right, supply chain, inflation. Here they're waiting on the CHIPS Act, the slowdown in PC sales. I mean, but one of the benefits of the slowdown in PC sales is it's going to free up product, right? I mean, that's like just the economics thing that everything out there is a scarce resource with an alternative use. I mean, whether you're going talking about water and wood or you're talking about chips, because if there's less demand for chips to go into PCs, well, that's going to free up time, labor, material to go into the other things that need it, like the cars and I don't know, phones and smart TVs, whatever. Yeah, so it's kind of interesting to see that shift. What do we got here? Yeah, so I think Intel looks good. I know they're getting dumped on. A lot of people are beating up on them. They decreased the price of was one of their GPUs, I think. Um, I shouldn't speak about things I don't know. So yeah, I think it was Alder Lake. I think they had to drop the price of something and people didn't like that. Camaray, hey, Camaray. I don't know. You can't tell me. So holding off buying right now, waiting for the next rate hike to see what the market does. Still think I have 20%. You know what? I always say I'm selfish about it, but I hope that there's another rate hike, which there will be, obviously. But I meant market drop. That it's beautiful because when the share price drops, the dividend yield pops, and us investors get more bang for our buck. It is just. I wish it would fall farther, and it's so silly to say that when people are panicking because of the share prices falling, and us investors just loving it. It's one of the great things about dividend investing that helps at least myself sleep well at night. So I hope it goes a little bit lower. I would think that would be pretty cool, man. Let's see. Look into VFC. Yeah, they own Vans, Timberland, North Face. Yeah, I'll pop them on. I think they get a good dividend safety score. Let's see. I was looking at Corning. Yeah, VFC. I'll see who they all own. Yeah, dividend safety score of 80. Look at that dividend yield. It is way above the 5-year average. Let me see here. 77% above the 5-year average is the dividend yield. That is pretty swell. That's swell, guys. And let's see, 50 cents a share. Hey, 50-year. Hey, look at that. They're a dividend king. I was not aware of that. 50 years of dividend growth, although the last one was pretty slow. And see who else they own, because I think they own Dickies, right? Let's see. We got North Face, Timberland, Smart Wool, don't know, Icebreaker, Ultra, Vans, Supreme, Napajiri, Eastpak. There it is, Dickies. I'm a big fan of the Dickies. Am I a Cholo? No, but I like the Dickies because I don't know, they feel comfortable. And Timberland Pro. Nice. Yeah, and they were founded in 1899. Looks good. That's a company I know Ryan Williams talked about, and yeah, I think there's nothing wrong with VFC Corp or VF Corp. Dow is looking attractive at the current price. I don't know terribly much about that, so we take a look. Come on with me. Is this ASMR stuff? Hey, I don't think is that an underserved niche? ASMR dividend investing. Let's see who we got here. Oh, what were we doing before I went off the rails? People are yelling, Dow, it's Dow. So they give them borderline safe. Let's see if we can find out why real quick. 5.45% yield. Nice. Yeah, looks like they stopped paying a dividend for about a year there. Growth, 70 cents a share. 6% above the 5-year average of the dividend yield. Yeah, the PE that's pretty far below the 5-year average of 11.8. And definitely look cheap. Only a 32% free cash flow payout ratio. I think they're a cyclical company, right? They buying back shares. Shares outstanding. Apparently in 2016 they had no shares outstanding. So 740. They're slightly diluting shareholders, so it makes me wonder what they're using that cash for. I don't know. That's something you'd have to dig into. When you see a company that went from 742 million to 749, but now they bought back a couple million. So what are they using that money for? Total sales are growing. 8% free cash flow margin could be a little better. But yeah, it's interesting. I'd need to dig into Dow a little bit more. What did you say, Caitlin? Not a fan more. FRG bought some other stuff. No, that's you can. Hey, share your. You know what? Whatever helps people make money. Whatever someone can make money on, I'm all for it. I want everyone to make money. I don't want people to lose money, which is what I did when I was investing in a lot of like trying to swing trade and the penny stocks, which I did. I got bit by the bug with Voyager Financial. A lot of you don't follow crypto, but Voyager is a trading platform, and they had been at like $29 a share. They were at 65, I think. And I was like, okay, they've been falling pretty hard. I'll bet they bounce from here. And I bought 100 shares. It was like $65. I had to pay a $7.95 fee to Schwab because they were over the counter OTC. So they charge you for that. So it ended up costing me about $70. And like 2 days later, I think they announced bankruptcy. They've delisted. And I want to say they're at like 30. I don't know. Let me see. I think they're at like $30 a share. VYGVF. Voyager Digital is currently, let's see, 27 cents a share. So that one has not been pretty, but I don't gamble. I don't go to casinos. So I looked at that as kind of a casino play, which I lost big on. Josh, what's up, Josh? Looking at adding JPM and AbbVie right now. Yeah, AbbVie is tough. This is a great one here, talking about AbbVie. I just made that song up, copyright. Yeah, but AbbVie is, I was buying them in the $70s and $80 range predominantly. So for me, they're probably cheap. Let's take a look. I haven't looked up AbbVie in a while. Popular dividend stock and with good reason. 70, safe score. 3.69% yield. Yep, it's below. 8.5% dividend growth, though. See, here's mine. I have a total across 3 portfolios that I share, 36 shares. And where's my average cost? $89.60 per share. So I'm well under $100 per share, which is a very nice yield on cost of 6.29%. So 2 account hold AbbVie, and yeah, and I'm up 70% on AbbVie. So it's hard for me to keep adding, even though I probably should, but this is a good reason why I'm not. So yeah, a lot of dividend growth. This is flat here because if you don't know, they were part of Abbott Laboratories and they spun off from Abbott. They gave them the boot, baby. $1.41 a share payment detail. And yeah, on both of these metrics, it looks overvalued to me right now because the current dividend yield is 23% below the 5-year average, and the PE is above the 5-year average. So ideally, you always want to see the current dividend yield is above the 5-year and the PE is below the 5-year. And yeah, look at that 52-week range, 106 to 174. They're toward the higher end, but still only a PE of 11. So paying $11 for every $1 of AbbVie's earnings. Free cash flow payout ratio, only 44%. That's really not that bad. Their earnings per share have been going up and to the right. Free cash flow is more important, I think, up and to the right. Shares outstanding, though, they have been increasing. And I think, yeah, but they're growing their sales, which is what we want to see. Where's their net debt? Yeah, they've been paying down some of that debt. So down to 81%, which is kind of high. And that's what I think is turning off some people. But if you don't know, there's something called a patent cliff. And I think Humira is about at or already over the patent cliff where all the generics can start making the biosimilars. And it's not a very good thing. So we need to look at the pipeline. And honestly, I haven't looked in a minute at AbbVie's pipeline, but they only get a certain window where they have exclusive patent rights to the drugs that they make, and then they're open to competition. So we'd need to look into their pipeline. Yeah, GLW. Absolutely, Steve. Let's check it out. I might want to share the screen though. Sorry. Funny looking at myself down there. Because I'm not always certain that I'm still on. So I've got my phone here with myself on it, and it's delayed. But yeah, it's just my weird quirk to make sure that I'm still hooked up to the internet and live and everything. Lunacy, I tell you, lunacy. All right, let's share this. What are we doing? GLW for my guy Steve. Let's check up. Did I already do that? Oh no, I didn't show you guys. 77, dividend safety score of 77, yield of 3.31. And let's look at their growth. 13% increase in February of 22. Yeah, it's 20 years. It has an 11% CAGR. And that's a really nice chart. 11 years of dividend growth, 14 years uninterrupted, 27 cents a share. Yeah, here we go, Steve. So this is exactly what you want to see. Dividend yield 32% above the 5-year. And the PE, because they have it right there. Makes me sound smart when they put it there. I can't do the math that quick. So it is below. I can do above and below though. So I know, because I went to public school, they told me early on that 17 is more than 13. So I say with the utmost confidence that the current forward PE ratio, based on my mathematical training from the public schools in Berwyn, Illinois, is below the 5-year average of 17. Hard-hitting analysis you won't get anywhere else but right here on the Dapper Dividends channel. Yeah. Their 52-week range is salute to all you lunatics, is $31.42. You can read it. And free cash flow payout ratio wasn't so good in 2019. I must have had something going on there, but 56%. That's doable. I just like to see if they're buying back shares. Yeah. Down from 15.10 to 8.47. So that's nice. Again, I always say you want to see the shares outstanding going down and the total sales going up, which it is. And good return on invested capital, 11%. Free cash flow margin, 17%. 33%, not a lot of debt. And a decent amount of interest coverage ratio, 8.02. For those of you that don't know, the interest coverage ratio right here, that means that Corning has $8.02 of operating income to cover every $1 of interest expense. And you got to be able to pay the interest on that debt, man, because if you can't pay the interest, then you're at risk of default. And that's no bueno. So if companies are facing default or a dividend, they're going to cut the dividend to shift all the available resources and money into paying that the debt. Here we go, Caitlin C. Position in POWW and HROW. I'm not familiar with those, but I love it. I love the ideas being shared. On my dividend watch list, CTVA under 48, Williams Sonoma under 100, and Nike under 90. You know, I've been saying Nike under 100, but man, honestly, I would love it under 90. I will probably nibble if it gets, I know we were right at 100. I think it touched 99. Let's look. Caitlin. Hold on. I started switching without bringing you guys with me. What is this guy doing? Doesn't he have this stuff figured out yet? Here we go. Watch this. Back to top. Back that thing up. What are we doing here? Nike. There it is. Nike. Safety score of 99. 99 for all y'all who don't speak of the Espanolish. So dividend safety score of 99. And yeah, that dividend yield, I would love to have it at like 1.5. I'd love to see it a little bit higher. Yeah, super. Everybody knows Nike. 20 years of dividend growth, 38 years uninterrupted. That has, I believe, because I read Shoe Dog, I think that's when they went public. I think they went public in the early 80s, if I'm not mistaken. They've been around since the 60s. Really, really interesting book about the founder, Phil Knight, wrote that book, Shoe Dog, and I'd highly recommend it. So, from my interpretation, they've been paying a dividend ever since they went public in the early 80s. $1.22 a share. Let's see. Yeah, it could see. You're right. These could be a little bit better. We're only 12% above the 5-year average. I'd love to see something like 25, 30% above. And then they are a shade below the 5-year average. Here, this is what I wanted. $1 is their lowest. I don't know. I think this is wrong. I swear I saw them at 99 like a week or two or a couple weeks ago. And as high as 177. But that PE is, it looks high, but their 5-year average is 30.4. So a mistake a lot of people will make is they'll say, yeah, but the consumer discretionary is 12.4, or they'll say the S&P 500 is like 15 or 16. But you got to look at the company, I think, first and foremost, and then at the like companies in the sector. But yeah, just a solid company all around. They are 34% free cash flow payout ratio, 1.61 billion shares. They've kind of cooled that off. Actually, they've increased shares a little bit, but yeah, their sales are increasing. It's funny. We were in the city yesterday in Chicago, and everybody was wearing Nikes. So look at this. My guy clowning. Fire, baby. Clowning. He is always showing up in the comments. I love it, man. I love you. Thank you. Thank you. And let's see. Ben, looking into Qualcomm. Yeah, after the Apple ruling, they might see more money coming, and which is better for dividend stock appreciation. Curious if anyone has thoughts on this. Yeah, anyone buying Qualcomm? I'm really not. I'd like to get Apple, though, but I'm being stubborn and waiting for them to get closer to, if not below 100. I don't know if it'll happen. Every time I start getting excited, like Apple starts dropping, it's like they put jam on the brakes and then they reverse course. So if anybody has thoughts on Qualcomm, let us know. Let me get caught up on these. Yeah, long Qualcomm. See, I'm behind you guys. I love it. You're talking. I got to get better with scrolling through these, and just because I love it. I like reading all your comments and talking with all y'all. Yeah, there are more than just phone chips. Yeah, Qualcomm. If anybody likes, we could look up Qualcomm, see what they get. WSM camera. Nice. Yeah, I think a lot of people think it's wow, and you're waiting for Nike sub 80, dude. Yeah, I'd be with you on that. I would totally be in on that. I think a lot of people, and this is the problem though. This is the problem with really solid companies like Nike and Apple, is everybody's waiting for them to fall and be cheap. So when they start getting cheap-ish, I think everyone just comes in and says, all right, that's good enough for me. I'm going to buy here. So I don't know. I don't know. I think that would be in the throes of close to a bottom of like a capitulation panic sell-off in the market, right? That it would take for them to get that low. I hope so, but I don't know. Let's see here. Steven. Yeah, man. I throw money at growth stocks. I have here. Well, since you're so kind, I'm already going on to my next screen without bringing you people with me. Here, I'll show you some of my growth stocks. They should be here on my portfolio tab. We'll just do the portfolios in general. I think I do this. Let me sort by dividend yield, because do it in reverse here. Or not. Hold on. I'll get this. Let me do this to go to the bottom. There we go. Okay. So I have Aurora Cannabis, which has been a big muck up. Let me make this a little bigger. Aurora Cannabis has been terrible awful. I bought a hot stock in a hot market in a hot sector and got burned. I've lost in total about almost $1,000. Now that's not right because I sold them and then I rebought them back in the Roth because I tax loss harvested and then I have a few shares in the Roth. But Alibaba, 11 shares, I'm down 1.2% on. Dutch Bros, look at that, 4 shares. Immunovant, IMVT. Now this is one that I made a mistake on. I misread the chart. I thought it was going to bounce from where it was at, and it just did not bounce. And I didn't sell because I get married to what I have. So I'm, stuck with these. But Neo, 25 shares. Now, if you remember, I had 100 shares and I sell covered calls almost every week on those 100 shares. Right now, I'm without them because they got called away, but I'm selling cash secured puts. So I'm still making money on Neo and I was way up. I was buying them I started buying them at the IPO in September of 2018. And it was stupid. I wrote them all the way up and Segi, Sycamore Entertainment Group. Check that out. They're a micro penny stock. My boss's son recommended them. He said, I did research. They're going to, and I did. I was like, I think I threw $20 in there. So Segi, Take-Two Interactive, big fan of them. I probably should be buying more here, but I get so focused. I just wanted a few because they own Rockstar Games and like Red Dead Redemption, Grand Theft Auto. That's Take-Two Interactive. So pretty interesting. I think they're trying to expand more into the mobile games. And then there's my Voyager shares, which is, I read those wrong. Yeah, I'm down 62% on this column. This is just the price. And then Warner Brothers Discovery, those were the spin-off shares. So there you go. You can see some of those growth stocks I have, a little bit riskier. Probably my favorite out of all those is both Alibaba and Take-Two. But yeah, not a bad thing. I think everybody should have some portion of their portfolio, even 1% dedicated to growth and or like risky. Because if that risk blows up and pays off, blows up in a good way, you'd be set. Add to Google and Facebook. Nice. Yeah. Dude, awesome, guys. Separate growth portfolio, Google, AMD, Amazon, Meta, the artist formerly known as Facebook, Meta, Microsoft, Apple, Qualcomm, and SCHG. That's a new one. That's not SCHD, is it? Where's G on the keyboard? Ooh, it's close to D. Maybe you meant D. I don't know. But see, they have a lot of those. Schwab has a lot of different ETFs, and they can get tickers close to being the same. Let's see. Greg, what's up, Greg? I don't know what I'm doing here. I'm doing double salute. What's up, Greg? A stock that we rarely hear about, but we always hear the name is Nasdaq. NDAQ, they pay a dividend. Oh, dude, Greg, baby. We got to look at that. Let's look at NDAQ. What did NASDAQ stand for? National Database or Dealers? National Dealers Automated Quotation. I don't know. I probably should know that, right? All right, let's see here. NDAQ. Stop sharing this. Oh my God, we're all blown up. AQ. There he is, NASDAQ. And they do pay a dividend. Man. Well, this fits in nicely with this episode. And, I can't know everything, but I love it. Now you just hit me, man. I love this community because you just hit me with a stock I didn't even know existed or paid a dividend. So NASDAQ pays a dividend. I was hoping they'd say in here what it stands for. They don't. We might have to Google that because it's going to bother me. NASDAQ, dividend safety score of 61, dividend growth. They're a technology company that serves capital markets and other industries. Very interesting, man. Yeah, 1971. I'm sure it says it in there somewhere. Anyway, boring. 9-year dividend growth. 11% grew last in April of 2022. 60 cents a share. Let's see. Yeah, that yield though is a little bit below the 5-year average, as they tell me. 15% below. 142, couple fine. Yeah, free cash flow is super low. Earnings per share, free cash flow per share going up. Sales growth has been down a little bit. Yeah, their shares outstanding, pretty flat, buying back a little bit. Sales up. Nice. Return on invested capital, 13%. Return on equity, 19%. Strong company, man. This is really interesting. A little bit of debt, 50% though, and 1269 of ICR. You know what? Let's I gotta know now because I here NASDAQ. What do you quit meaning? Can't think here. Let's see. And the answer is National Association of Securities Dealers Automated Quotations. Well, I had some of the words right, just jumbled up, all in different directions. Oh, you guys didn't get to see that. Right. How did I do this? I don't know how to do this. This guy, like, what is he doing here? Because I shared the window. Sorry for those of you playing along at home. This probably isn't very entertaining. Let me do it. Anyway, so you heard me say what it meant. Here, I'll pop it on there for those of you playing along at home. Here, this is what I was looking at. Ba-da-ba-ba-da-bop. Big, make it bigger. Why can't I make you bigger? Whoa. Whoa. Remember that from Blossom, Joey? Whoa. Whoa. I think that's more like it. This guy can't even get his voices right. National Association of Securities Dealers and Automated Quotations. Anyway, that's what NASDAQ stands for. Stop sharing. All right, I'm going to get caught up to you guys. Netflix, WBD. Steve, Netflix, they are down big. I don't know if they're going anywhere. I know they're switching to ads. I think they're going to start integrating ads. Caitlin, love the suggestions and the knowledge, Caitlin. Really, really do. Did a semi-space. Never seen much reason straight from AVGO. Yeah, they're probably the strongest, right? One of the strongest. Expanded when AVGO went under 470. Yeah, that's a super, super solid company. I know from what I've done. They're now you guys make me want to look. All right, let's look at it. Now I want to know their dividend growth rate. Let's see. I gotta know. I shared the wrong screen. This guy know what he's doing. All right, let's try it again. I wish there was a hotkey for this. Hotkey. AVGO. Let's see their dividend growth rate. That's all. I promise that's all we'll look at. 67, 3.29% yield. Holy cow. 44% 10-year CAGR. 43% 5-year CAGR. Dude, that is stout. And the yield is about in line with the 5-year average. So yeah, that not bad. Yeah, and they're at 498, and Caitlin was right. They went down to 46. Dude, you almost bought the bottom. They went as high as 674. Yeah, AVGO looks solid, man. Solid. That's one I don't own outright, but I know I own them in some of the ETFs and funds through my work IRA. Ben, Nasdaq with T-Row. Not sure it's the right to do. They might. Yeah, I'm still thinking about T-Row. I know a lot of other fellow YouTubers have been pushing T-Row and talking about T-Row. I know Dividend Data did a video on T-Row. Maybe, check out what he had to say about T-Row. Yeah, so I know they're solid. They get a good score. QQQM. That's one I'm not too familiar with, QQQM. Obviously, it's the Q's, NASDAQ, but I don't know what the M is. I'll look it up. We can look it up. Let's see what we got. The Invesco. Oh, did I say that was NASDAQ? Yeah, the Invesco NASDAQ 100 ETF. Oh, so it just tracks the NASDAQ then. I thought just the Qs did, right? I thought it was just QQQ. What's the difference then between QQQ and QQQM? I don't know. Anybody know? Let Papa know. And Journeyman, Nasdaq is having a 3-to-1 stock split soon. Really? Man, this is, well, you guys surprised the heck out of me. I love it that I gave you a few that maybe you didn't know paid a dividend. You gave one to me that I sure didn't know paid a dividend. And let's see. Yeah. Very cool. I love it, man. Sharing information. This is what this is all about. I'll pop on for 1 hour a week. Give me stuff to look up. We'll look it up. We'll just chat, shoot the S, We'll give this another 10 minutes and then bug on out of here. Same as the Qs, but lower expense fee. Oh, okay. 0.20 for Qs, 0.15 for QQQM. So is that because one is owned by Nasdaq and one is owned by Invesco? Or are they both? No, I think I'm kind of looking with you, but I think they're both owned by Invesco, or one of them's a trust. See, I don't know. This is something that's a little bit out of my wheelhouse that I don't know about. I don't know, but there's just so many ways to make money in the market, right? There are so many ways. So why don't we end and wrap this up by shooting out some of the things you're looking at this week or thinking seriously about buying? I've been kind of waiting, sitting on my hands, and I always feel like I know as soon as I buy, there's going to be a market drop, and I could have got things cheaper, but it really does help to play the long game because, whether you buy a stock, say, I don't know, what were we talking about? Nike. If you buy Nike at $120, $100, $130, or $95, yeah, it's a difference there. But in 15 years, when they're making the flying Air Jordans and the ones that walk on water, and everybody has to have them, is it really going to make that monumental of a deal if you bought it at 90 instead of 110? I don't think so. But let's see. What did you say, Caitlin? QQQM carries a lower expense ratio versus Big Brother, the Qs, lower trading liquidity, and suffers from broader spreads as a result. Very interesting. Yeah. For buy and hold, QQM is better. QQQ is better for trading. Yeah, and that's kind of why speaking of the liquidity issues and the spreads, I know when a stock has a lot lower liquidity, those spreads get really, really big. And who is it? I'm thinking AAP, I think might be one. Advanced Auto Parts might be one that I've experienced that with. But GameStop, right? They just split. And I'm thinking, why did they split? Now, I know companies have split their stock when they have liquidity issues. So they'll do a split. And again, nothing changes with the company. The value of the company does not change at the time of the split. It's literally just nothing changes. You're cutting a pizza from 4 pieces into 8 pieces or 12 pieces. It's still the same amount of pizza and surface area. So it's the same thing with the companies. But yeah, they anyway, so I don't know why GameStop did that. They don't have liquidity issues. I think it's just that gimmick to try and get more people in. And they're laying people off too. So, but that's interesting. Super cool. Thank you so much for that explanation, Caitlin. Dude, I love that stuff. My guy, Blue Collar Bill, is always buying regardless of what the market is doing. Yeah. That's kind of what I've been doing as well. Ben's watching Visa, Walgreens, SCHD, which I own in our daughter's wedding account, Lowe's, Sherwin-Williams. By the way, I know I did a video on it and I don't really talk about it, but I had been reading Ramit Sethi's I Will Teach You to Be Rich last winter, I think. And in there, he talked about saving for a wedding. If you're single or if you have newborn kids, you should be putting money away for a wedding because they're really expensive. And I started a wedding fund, just $50 for each of my daughters every month. So $100 a month. And I opened up another portfolio inside my Schwab account. And the only thing I'm putting money into is SCHD, and DIV. Oh, because I didn't want one more thing to worry about. And I wanted to see how those perform over the next couple of years, what their performance is. So that's it. Whichever one, I'm kind of alternating. Whichever has the lower total value, I'm just buying $100 worth of the other one. So we're flip-flopping it. But yeah, SCHD, I'm going to be buying more lows, I think, because it's in the Roth. And I can't, this is the problem with the Roth. I can't put more money into it now because it's maxed out. So I have to wait until next year. Yeah, Caitlin, need to see the next inflation prints and how earnings and guidance shake out this month before I'm willing to push significant money in. Took profits during this rally and I'm holding mostly cash. Yeah, man, lady. I was holding a lot of cash for, I don't know what I do. And I just said, you know what, I can't, I don't know. Isn't that trying to time the market in a way? So I just started buying and said, you know what, if it drops, I'll just keep buying more, my normal amounts every week. And that's all you can do, you know? Oh, new hairdo. Oh, Shamir, no, I got to cut it, man. You guys know I do the sides myself. I've just been lazy. I've been really lazy. So it's, plus I had the hat on earlier and I took it off. We started with the hat. We'll end with the hat. But yeah, I've been lazy. So it is kind of a new hairdo, I guess, for the channel. Oh, all right, Stephen. Maybe we'll on with your thinking of selling out of ORCC. Yeah, business developments. They're just trying to help. I think they invest in businesses trying to getting going. We'll look it up. We'll see what ORCC is on Simply Safe. Now I got to go, man. I got to finish my video. I got a garage we're cleaning out. I got a lawn to cut. I got real people stuff to do, you know, after I talk with all you fine folks. So ORCC. Oh, did I say ORC? Owl Rock Capital. All right, so they give them a dividend safety score of 50. Pretty high yield, 9.76%, $12 a share. Looks like a big increase. There was a cut there, and it's been flat. 77% 5-year CAGR. Yeah, that's just because of this one gigantic jump up from 16 to 17. They haven't been paying a dividend very long. It's been frozen at 31 cents a share or $1.24 annually. Yeah, that yield's 10% above. They do have a 5-year average of 8.86. Their forward PE is below the 10-year average. So between $12 and $15, they don't move a lot. And I'm curious about their shares. So they're financial, right? Custody bank. Yeah, so I know you can't really look at free cash flow with banks. Yeah, I just don't know that much about BDCs. I know there's some wonkiness with them. They've been issuing shares, but you know, because they need more money to invest with. So they've been also increasing their sales, which is good. You want to see that. Yeah, if anybody has thoughts on ORCC, we'd love to know. Return on invested capital, not that great. Free cash flow margin, a little bit of debt, but they're, you know, I don't know that much about them, but this is where it helps to have a service like Simply Safe Dividends. So they have a dividend safety score of 50, which means there's a high likelihood that there's going to be a cut in the near future. So yeah, Steve, I'll do it again next weekend unless something comes up and I can't. I know, I think we're going to German Fest in Milwaukee in a couple weeks, the end of this month. So I don't know if I will be able to on Sunday because we go all day Saturday with some friends and family. We stay overnight up in the MKE, and then we do stuff around Milwaukee on Sunday and then drive back. It's like a 90-minute drive from where we lived in Milwaukee. So we, yeah, I may skip a week here or there. We do stuff like that. But if it's like this, if I'm not working, I'm home. I kind of know on Saturday night. So that's why I did the thumbnail and set this up. So I would say going forward, if you don't hear, like if you don't see it by Saturday night, chances are I'm not going to be doing a live stream. But yeah, man, I appreciate it. And I don't know if anybody has anything to say, any last parting words. Speak now. We want to hear you. See, this is what happens. Freedom Stacker. I'm just about to sign off and people jump on. Now, this is where it gets kind of funny because we can just, it's like, someday I'll do it. I'll just stay on for 5 hours straight. Maybe I'll fall asleep, take a nap during. But anyway, all right. Well, we're at an hour. I think I'm going to wrap it up there. And I do appreciate it. And before I go, make sure I want to know what you guys think of this next video I'm going to put out, because it'll be coming out from right now, hopefully about an hour. I got a little bit left to do on it, like the thumbnail. And you guys want to watch me work on the thumbnail? You can help me out with the thumbnail. Anyway, so I kind of did it really quickly because the whole concept for me is to just get out to kind of remind you that this is a company that if you wanted to buy right now in the next month or the next, few weeks, that they're at a good valuation, I think, and you can add to your position if you want to get in for that next dividend, lock in that starting yield on cost on that share. So I would love to know what you guys think of it. Please leave a comment. And look at this, dude. Freedom Stacker. Thank you, brother. What do you want? You do a little dance or something? He gave me money. $5, man. That is too kind. Thank you. What? Shiba dog in combat position. I don't know. What does that mean? What? I'll stick on for a few more minutes since you were so nice to tip your guy here. I love it. It's really hard to dance with no music. I'm very eclectic with the music I like. I love like post-punk, Joy Division, New Order, God, The Cure. I don't know, just industrial music like Nine Inch Nails, Front 242. So many bands most of you probably have never heard of, or groups like that's stuff I like. Peter Murphy. I love dancing to stuff like that. That's oh dude, come on. Steven. All right. You guys are crazy now. For you, I'll do another 10, 15, whatever you want. What do you guys want to know? What do you want to talk about? That is just seriously, guys. I mean, that is just so nice. We work hard for our money, and for you to do that, usually I just want everybody's time or not, don't want your time, but I want to put out content because I look at that as the product, but all of you all pay with your time, for whatever it costs you, however, 8 minutes to watch a video. So yeah, I mean, dude, that is just so very kind of you both. I mean, thank you. What do you want to know? What do you want to talk about? Let me know. Ask a question. You want to look up something on Simply Safe Dividends? Ask me anything personal. I don't care. You want to look up something on the internet? You want to Google anything? I don't know. Yeah, but seriously, guys, Steven and Freedom Stacker, I mean, thank you. Thank you so very much. I should do it like that. That's a little better. Right? What do you want to look up? What do you want to know? Ask me something. Anything. Shoot. I don't care. Anything personal, whatever it is. Shoot. Go ahead. I don't know. I was going to say something. I just had a brain dump. I don't know. This is so strange. Somebody just say something. Here, I'll type something. Oops, I misspelled, guys. I don't know. What do you guys want to know? Oh, a Cubs fan. Okay, Shamir. Well, I hate to burst your bubble, but yeah, I am a Cubs fan, and my wife is a Cubs fan, but I grew up in Berwyn, Illinois, which is right on the outskirts of Chicago. And my look at this. You go, dude, Michael. Sorry, Shamir. Look at this, another super chat. I don't know what to say, guys. This is too much. This just this is really too much. What do you want to do? Let me know it. We'll do it. I'll stick around for a bit more. I honestly though, I don't know SEK. I thank you for it. I don't um I don't know what that is. What is it? You give me clue me in. Clue this guy's in. Yeah. So Shamir, my grandfather was a Cubs fan, and just growing up, I would spend time with him in the yard doing yard work and whatnot. And he would put on the Cubs on WGN radio. So I grew up hearing the Cubs. I remember we'd be listening to the game. It would be a hot summer day. And then he had a garden, loved his garden. Tomatoes were his prize. He would grow like dill. And I remember coming in when I was, maybe kindergarten or so, and we finished watching the game on TV on WGN. And I remember hearing Harry Carey, Ryan Sandberg, Ron Say, a lot of those old guys, and he would cook a hot dog, and he would use the tomatoes from his garden and some just things from his garden. And I remember eating with him, watching the Cubs. So Cubs hold a very special place in my heart just because of that, because of my younger years. And I didn't have a father, so my grandfather was like my father. So those were very, very special times for me. From Sweden. Yeah, dude. Michael, man, whatever you want. Would you want me to, I didn't see on here. If you want me to look something up, an opinion on anything, guys, let me know. I mean, it's just so very kind of you. I mean, I really do appreciate that so very much. And yeah, Stephen, if you knew, there he is, Citizen. Yeah, Harry Carey was a legend. That's, on the podcast, I kind of sign off. So long, everybody. That was Harry Carey's thing. So it's it's just a weird thing how all over the world, and I've talked with people that grew up the same way with like soccer or football, watching football, European football with a family member, and it's very special memories that we can have around sports. I love it. And you are right. JB Pritzker is a billionaire. And I don't know. The owner of my company was running for governor, Gary Rabine, and he didn't get picked, so he had to drop out. But yeah, we'll see here in Illinois. I'm not a fan of JB Pritzker. I bumped into him literally. We were at a Irish Day parade when he was running the Chicago Irish Day parade, and I knew he was the candidate. And I saw him walking with somebody, and I kind of, he wasn't looking at me. So I don't know why. I just was like, I don't know if I'll get close. And he kind of turned and he like walked right into me. Just, our shoulders hit. And he didn't even notice. He just kept walking. But that's my claim to fame with Mr. JB Pritzker. A lot of people aren't a fan of him around here, around these parts in Illinois. And Michael, dude, you're right. We can learn, and I'm always learning as well. I think it was, I forget which Stoic philosopher said, all I know is that I know nothing, which means that we should always be questioning what we think we know, because there's always some information that we don't have that we've formed our opinions on. And as I get older, it's what I've really tried to do is look at those people that I don't agree with or may say something contradictory to me. You know what? To get a little bit political here, put it this way, without naming names, I have two acquaintances. One of them is a huge Donald Trump fan, and the other acquaintance and they know of each other. They don't know. The other one is a huge liberal Democrat, hates Donald Trump. And the funny thing is that I'm in the middle. I feel like I'm a person without a political party. Anyway, to get to the point, one person says that the Democrats and Biden are trying to destroy America literally, and the other one says that Trump and the Republicans are trying to destroy America literally. Now, I don't care where you stand, but I'm trying to be like a Stoic philosopher and say, both of you are saying that the other side is trying to destroy the country. I don't believe that's true. Surely that can't be accurate. So I want to understand why each person thinks the way they do. You know what I mean? Instead of like immediately writing someone off and attacking, I think the world would be better if people would just try to at least understand why somebody thinks the way that they do. And, you know, whether it's right or wrong, I don't know. That's probably the most political I've been without trying to get political. But yeah, so I don't know what led me off on that tangent, but Ferris Bueller's, they attended a Cubs game and his voice was used for a bit. Yeah, that's funny. My first Cubs game was in 1984 when they were using Jump, the Van Halen song Jump. So that song, to this day, when I hear the opening of Jump, I immediately remember sitting along the third base line in the sunshine. It was an afternoon game because back in 84 at Wrigley, they didn't have the lights. So they didn't play any night games. I think it was 89 was the first night game. So all the games were during the day. And I remember being on that third base line and hearing Jump as the Cubs ran out on the field. And I remember, like, this is probably why I love concerts, because I could not believe that the players were like right there. Like, these were the guys I watched on TV. These were the guys I had their sports cards in my room. And I had a Ryan Sandberg poster, and like, he was right there. So again, it's just funny. I can hear Jump in my head, and immediately I have that vision just burn into my brain. So that's pretty cool. 1988, Shamir. Thank you. Thank you. Let's see. Video I say about monthly dividends. Oh, thank you, Michael. Thank you. So I'm going to have something similar. You know what? I'm going to write that down. I will do, because I think I did one before, but I'm writing it down now. Look for it in the next week or two. And I'm putting your name. I will do a video for you, something together on monthly dividend stocks. You got it. And yeah, Steven thinks as I do. You know, it's great. I love hearing that. Yeah, in order to build back better, you must destroy it first. That's why. Yeah, I'm just not going to get political, and I can understand. And believe me, I spent a whole evening with my one acquaintance who had been consuming a lot of vodka, and basically all the filters were gone, were gone from him. So, yeah, I just want to understand people better, I think, and always try to be questioning. And this could tie into dividends, is try to think, what if it's not right? Right. So I think I heard a comedian once say, might have been Joe Rogan, that the best material is when you try to punch holes, as many holes in it as you can. And if you punch a hole and you can remove that little bit, then it only gets stronger. So I think with whatever philosophy you have, if you can try and defeat it or punch a hole in it or prove yourself wrong on whatever it is, I think that makes you a better person, and that makes you a little bit stronger. So that's kind of what I'm trying to do, and where I'm at is I'm going to go through life. I always want to keep questioning my beliefs and what I know and I think to be true. So very good. But again, Freedom Stacker, again, I mean, beautiful. Thank you so much for that super chat. That is just awesome. And Shamir, first night game was at Wrigley. Yeah, 1988. No, I remember that. I was 11. No, I was 10. I was born in 78, so I was 10 years old. Yeah. Well, that was an interesting rant. I didn't think I was going to be doing with getting a little bit political, but you know, it's just so sad. We have this one life and we only live once. And here we go. I'll tie it back into my grandfather. So his sister lived 3 blocks away from us in Berwyn on the same side of the same street, 3 blocks away. It was my birth, and what really changed it. So my grandmother was walking me when I was really little, maybe 3 or 4. She was walking me to a park, and she passed um, my grandfather's sister's house, and started talking to her. And because of that, it kind of opened up a door. But they didn't speak for almost 20 years because of a political disagreement. And now they're both passed on. But I look at that and I think how sad that they had a political disagreement, and their own flesh and blood didn't speak for 20 years when they lived 3 blocks away from each other, literally like an 8-minute walk on the same side of the street, on the same, in the same town, because of politics. And I don't want that. I want to understand people more. And, you know, I don't know. It's life. Maybe I'm wrong. Again, I'm trying to punch holes in what I believe and what I know to be true. So I've been ranting for a bit. And again, guys, I was going to jump off at an hour, but because of Steven and Freedom Stackers and Michael's from Sweden, from their super chats. I mean, guys, that's just too much. Whatever you want. I'm going to throw it out there one more time. If you want me to look up something um, on Simply Safe, or if you want my opinion on anything, I will give it to you. So I'll give you a few minutes to go ahead and ask. We're watching a show on Netflix about World War II soldiers, and they're guarding a house in France that's haunted. I like horror movies. I like a lot of horror stuff. It almost sounded like I said horror movies, not like horror. That was a different man at a different time. Yeah. But yeah, I love the horror stuff. Probably why I like a lot of the darker music. If any of you have XM, if you have Sirius XM on Sunday nights, I don't know what time it'll be where you are, but at 9 o'clock my time, Dark Wave comes on. It's hosted by Matt Sebastian from slicingupeyeballs.com. And it's the darker side of late 80s, early 90s classic alternative, like post-punk, industrial, really cool stuff. One of my favorite things to watch. Listen to. I can't watch music. It's not a video, but there we go. We Crash. All right. I don't know what We Crash is, but I'm going to write that down too. I got my little notepad. We Crash. And yeah, sweet. Well, it's been another blast, guys. Again, you floored me with the donations. I truly do appreciate that. I got my video to edit. I am going to, again, what was that noise? It's going to be 15 stocks that are going ex-dividend from here on out for the rest of the month of July. And I'd love to know your opinions on it, your thoughts. And like I said, it's not much analysis. It's just a really, really quick, almost like a reminder of, hey, these stocks are going to be going X pretty soon. And I think they're a little bit undervalued, and they're paying a dividend of this much. And that's really all it is, because with 15 of them, if I go too deep into the numbers, kind of like we did here, I mean, it's going to be like a 50-minute long video. People are going to tune out. But as it is right now, I got a little bit more editing. It's probably going to be like a 9-minute video covering 15 stocks going X. And every month I'm going to do that. They'll change a little bit. They will be, I don't know, some months, I guess it'll be 15, some it might be 8, some it might be 20. So I'm going to try and keep it going really, really quick. All right, guys. Yeah. Anyway, here we go. Shamir's based on the events of WeWork. So yeah, if you want to watch that, I'm going to check it out. Although I just realized I don't have Apple TV. So I might have to find a way around that if I can. We will see. But anyway, Stephen Bishop, beautiful. Check out. Thank you. And here, all right, I will say hello to Belgo Boy. Every time I'm about to get off, somebody comes on, and you know what I mean? Like, I love hearing from all you. I don't want to be rude, but I do have to get this video edited and out. And I got grass to cut. Like I said, we got a little bit of garage cleaning to do. So I'm going to end this now. I will most likely be live again next week. So hit me up on Twitter at RustyRam78. Let's see if I got that. There we go. Hit me up on Twitter at RustyRam78. I'm on Instagram too. Citizen of the Year, by the way, has a YouTube channel. We're looking at doing a collab maybe next week or in 2 weeks, I think. We're going to do something, maybe our favorite dividend stocks at that point. But, oh, my goodness. All right, I got to stay on for a minute with Yuri. Yes. Yuri, thank you for swinging on by. This is one of my guys. He likes sending messages. We chat. Thank you. Thank you for coming on by, Yuri. Yeah, I was just about to get off, but I'll hang out for another minute with you. And what was I saying? I don't know what I was saying. I'm always saying something. I'll stay on until I run out of liquids. I'm almost out of tea. Nope, check that. I am out of tea. You know what's good? I like hot tea and iced tea. So I'm the freak, the weirdo, the lunatic that has hot tea. I don't drink it. It turns into cold tea, and I like drinking that too. So Yuri, man, very nice to see you. Very nice that you could check in here as I was, I don't know, just about to get off. Oh, I mean, sign off. Sign off of the... All right, guys. Well, I think that's going to do it. I'm going to jump on out of here. And Yuri, I'm going to leave it up to you. If you have a question, let me know. Thoughts on LYB? We're going to end it with Yuri because he has been a big, big supporter. I appreciate it. My thoughts on LyondellBasell. What's happening is what I thought might happen. I was worried that because they are tied into the oil sector, although not directly, but they're a lot of the plastics, the polymers, the olefins that they use are from oil. So I wasn't sure if they were riding up the oil sector, which I think they were, but it's kind of seems like as the oil stocks are pulling back, that Lyondell has been pulling back as well. And I'll share this one for you. We'll look at Lyondell real quick. And we'll do this one together. Come on, Yuri. Let's go check out Lyondell. Yeah, so they get a borderline safe dividend safety score, which doesn't surprise me. The yield is currently 5.44%. Yeah, you see I have 11 shares in the bridge at $73.06 per share. It's only 1.2% of my income, but look at my yield on cost, 6.51%, which is hard for me to sell because of that nice yield. And let's see. Yeah, they're a diversified chemical supplier and refiner. A lot of plastics they do. Yeah, their dividend growth. Yeah, see, coming out of 2010, they cut it. So it's been growing for 9 years. 6% 5-year CAGR, and $1.19 is what it currently is. The dividend yield's 20% above the 5-year average. Their PE is only 5.3. So right now we're paying at the forward PE $5.30 of. So we're paying $5.30 for every $1 of their earnings income. And yeah, look at that, just like that. They were at $117, and right now they're at 87, which the 52-week range was 84. So they're almost at a 52-week low after just being at a 52-week high. Their PE way low, 23% free cash flow payout ratio, but we see how that ran up to 96. So that worries me if they can sustain that. If that was high, if that was that high for 2-3 years, I'm guessing they would have cut the dividend. Free cash flow per share jumped up. Sales has still been nice, so I'm going to keep holding them. And look at that. Shares outstanding down to 333 million when they were at 577 million in 2012. Total sales, 50 billion. That is looking like pretty much an all-time high, at least a high for the last decade. really high return on equity and return on invested capital. Yeah, I mean, they look pretty solid. Good 10% free cash flow margin. Debt, little bit toward the higher end, 49%, and $16 to cover every $1 of interest expense. So I think they look good. I don't know. I might actually add a few more. Since Lyondell's close to my 52-week low. So hey, I might add a few more Lyondell's, and we'll see. We'll see what the week brings. But what a great reminder. That special dividend, remind you, knocked it down a little bit, because when a company, for those of you that are new and still listening, when a company pays a dividend, their share price will decrease by that dividend amount. And that goes for a special dividend, which theirs was, I think, $5.20. So when they authorized that, or they went ex-dividend, I should say, their share price decreased $5.20 a share on top of their regular dividend. So it was like $6 and something that they decreased. But yeah, I'd say look at it here. I think I might wait a bit, honestly, and my average was $79. So if they're going to go below the 79, I might add a few more there when they're below my average. So yeah, all right. Now I'm going to get off. Again, Yuri, thanks for swinging by. Glad we could talk about that. And for everyone else,